Obviously, you knew Alan Greenspan, you had worked with him, and then you went to join the Fed shortly after he served. It's certainly an era steering us through unprecedented peacetime economic expansion and then recast perhaps in the 2008 crisis. How should we view Alan Greenspan's legacy?
Well, I think he was someone who contributed enormously to economic growth in the U.S., but obviously there's also the issue of, did he also contribute a bit to some of the risk-taking that led to the global financial crisis? He got many calls right. For example, he saw the productivity boom in the late 1990s and held back on raising interest rates. Probably ex post a very wise move that helped employment to grow more than it otherwise would have. And so, as with anyone who was going to be in policymaking for as many years as he was in, many positives, and unfortunately one negative that's there that needs to be acknowledged.
That's the housing crisis. Essentially, a lot of people argue that he led to that he helped build leverage in the system that, ended up in the great financial crisis. Is that a fair characterization, you think? Because he did give us the great moderation, as Ben Bernanke called it.
Well, one of the lessons that he took from, let's say, previous crises when he was there during 9/11, if you look at the intro to his autobiography, The Age of Turbulence, he talks about how the lesson that he took from that was how resilient the U.S. economy was. His view was that a few words, comforting words from him and from the Fed, and maybe a judicious interest rate cut here or there, could get the economy back on track, even if there was a big shock. I think his view was primarily that the Fed could clean up after a crisis fairly quickly, fairly easily. And if the Fed tightened too much early on, it strangled the ability to grow, to innovate, and move forward. So he made that trade-off to say, let's have many, many years of growth and take perhaps a little bit more of a risk of some of that downside. But his view was that the Fed easily could clean that up. Obviously, when I was there, we did try to clean some of that up, but it probably had a bigger cost than I think he would have anticipated.
Well, one of the other big impacts that Alan Greenspan made was before him this veil of secrecy that the Fed operated in. Alan Greenspan brought into the era of the Fed issuing a statement after a policy decision was made. Randy, it feels like we are yet again putting under a microscope what it means, what Fed communication means at this moment with the new Fed chair, Warsh. Just how much has Fed communication evolved, and how much do you expect it to evolve yet again going forward?
It was amazing. It is hard to believe that the Fed didn't talk. You really knew nothing about what the Fed was doing. There weren't constant chatter on your program and other programs from Fed officials and former Fed officials. It was really a very quiet place. As you said, Greenspan introduced the first statements and then developing those statements further. What's very interesting is that Kevin Warsh, who served on the Fed at the same time I did, wants to move back to kind of the early part of the Greenspan era, where there was a much more simple communication, less forward guidance, although Greenspan did give some forward guidance. I think Kevin wants to go back even further back to something more plain vanilla beyond that. And I think he thinks that will help to push he and his colleagues to think in the big picture terms, rather than responding to every bump and wiggle in the data, every number that comes out. Try to sit back and have a bigger picture view of what does AI mean? What does the war in Iran mean? What do supply shocks mean? And try to convey that big picture to the market, rather than trying to comment on every particular number that comes out. Because the Fed needs to look through that, needs to see what the bigger picture trends are, and needs to have a stronger view. So I think that's how things are likely to evolve going forward.
Randy, how do you talk to your students about the Greenspan era and this whole kind of Austrian school, Milton Friedman, Ayn Rand vibe of libertarian economics, where government intervention is seen as a bad thing, and gold would impose discipline on governments, and the whole sort of economic freedom tied to political freedom, this whole philosophy of Alan Greenspan?
Yeah, it's very interesting that he started. He was very much influenced by Ayn Rand, and he talked about gold as sort of the only sound money. When he was at the Fed, we didn't hear quite as much about that. I mean, he certainly was a sound money person, but I don't think he thought that gold was the only way to achieve that. And I think he had a very strong view on the health of markets, the importance of markets, the importance of competition, and those shouldn't be forgotten. But also, we know that sometimes things can get a little bit out of control, a little bit out of whack, and some of that is unintended consequences of regulation. So making sure you understand that yes, there's a safety net that's there, but that safety net can have some unintended consequences that might not be so easy for the Fed to clean up afterwards is something that I think is an important qualification that comes in. He also talked about this a little bit in his testimony that he gave after the global financial crisis. He said there was a flaw in the system, and what he meant by that was that he thought that if people have their money on the line, they're going to do full due diligence and make sure that money is well allocated. Unfortunately, one of the things that we found out, and certainly Alan Greenspan talked about in his testimony, was that's not always the case. Sometimes people are not as careful as they should be, and if people are not being as careful as they should be, there's not the due diligence, and so bubbles can arise, problems can arise that can lead to things like the global financial crisis.
It's something that his wife mentioned in the statement she gave when Greenspan passed away, that he was always honest in acknowledging his mistakes. Randy, you also mentioned that part of the other part of Greenspan's legacy was allowing the economy to run hot in this 1990s internet era boom, even not hiking rates. And allowing unemployment to drop without doing so. I wonder, is history any guide there to this period we're currently undergoing?
Well, it was different because inflation was much lower at that point. We didn't have, just in the last few years, a high inflation coming into that. So I think the context is very, very important. But I do think there's an important lesson there, that the Fed, once again, shouldn't be just focusing on just the short-term movements of some of these numbers, but think about the bigger picture. What are the key things that are going to be driving the labor market? What are the key things that are going to be driving economic growth? And take those on board and not overemphasize the short-term numbers, but have a clear view on the bigger term, on the bigger picture. And clearly that's one of the things that Kevin has been talking about.